Alright, so welcome to Macro Crest. Uh, Last week was a memorable one indeed. So we looked at what Powell said last week on Friday at the Jackson Hole, which was kind of neutral to dovish in a sense due to some points, and people were actually were actually bothered about the independence of the Federal Reserve. All right, so apart from that, I think we are just good. But this week, nothing much, nothing serious, just some basic information, macro data from few pointers. But we're looking at the first week of September, which is very important. We have the NFP, which is very crucial in terms of uh, looking at the rate cut by the Federal Reserve, and we also have the next upper week, which will be inflation data, which is very important. Every other thing is just simple noise. And for that reason, going to the chart, what I have on my Dixie is bearish technically. So all this is done. So what I'm saying here is, if you look at this on a weekly time frame, of course we are bearish. So I was expecting a bullish move to the upside due to Dixie strength, but unfortunately this is not supposed to hold anymore because of the dovish stance Powell gave us. And so if you're pricing in on September rate cut 25 bps cut, it's not about the cut, it's about, is it going to be a bullish one or is it going to be a bearish one? That's the question. And if we are going to continue this way, all this, can we consider all this liquidity? Of course it could be, but looking at this to be taken off, so a bearish Dixie, and for such reason would have EU to the upside. It's just very very clear as to what we are looking out for, and it mitigated the zone I never expected. But what I now understand is clear that we would have a push to the upside, pull back, and then we can enter. It's just very simple for EU. The same goes for you Swiss. So this is also the zone I marked out for, but currently I know for sure it's not going to hold. So this should just be some form of reaction to short until September first week, which might not be clear. Then we look at the inflation, which is the second week, before we talk about the cut on, I think, 17th of that. So I'm actually expecting a bullish gold. In a sense, gold should be bullish. So we have this demand, which I expect should hold. Come on Monday, Tuesday. That's what I'm looking out for. Same thing with silver. So silver should push higher. So even with this was high. I'm looking for a higher high. And if this is a high, this is a low, we're looking for a high to create a low and to continue. It's just basic market structure for that. And then we had NZD weakness. I'm looking for Swiss strength. So if the Swiss is going to be strong, I'm looking at NZD weakness. So this would be a very good one. You have this low, you have this high, and then we're looking at a bearish momentum to the downside. This is lower low, lower high, so I'm looking for just a little pullback to continue to the downside. That's on a weekly, daily, and this is the break of structure. But the only problem here is that there is no good supply, so I'll be expecting this supply here to hold. But just in case, we don't have a supply, just expect a supply to be created here, and then we can look for shorts down there, which for the yen I still see weakness in the yen, but all this is due to this as a safe haven status it has, the yen strength. So look at this. Fine, we might say this is bearish, right? This is our range. Sure. You might say this is our range, and prices reacting from this supply area, right? Which I expected this imbalance to be filled, so I expected to come higher to short. So it doesn't make any sense to start looking for shorts. Moreover, the data, important data for the yen strength, which is the wage growth, the labor data, and Tokyo CPI is not clear. So if it is not clear, I expect a push here at some point. But for now, just sit back, sit off the yen. The yen keeps doing what it has to do. So, but it can go against the USD, of course. It can go against the USD. If we're looking at our demand area, we have this point. So this move has done its job. We had this, so we now have this move down here. Potentially before we have a move, but so it has to go to that. We're looking at 200 pips to the downside. Okay, so euro strength. Okay, still on Swiss strength. Sorry, we have the Aussie Swiss. So it's not too clear as to how I'm going to get into this, but if we should get back here, we would short the pound Swiss. Yes. Oh, I was expecting this supply to hold. Of course, it has held, and if I see a push here, potentially we'll be shorting this. So that's for Swiss strength. Then for euro strength, it's beautiful. We have the EA. So we've worked on this. So looking at EA, this is perfect area. I'll be looking for zones, but if it should come lower, then I'll strike it here. That's for EA. For incurred, which for the past couple of weeks we've been following it up. We have this demand on the daily, which we would be working with also. So, and then we have the EN. So EN, in terms, this is the only problem, is this movement is too far away. That's the demand, but it will be cool if it should get down here, but it's about to create a higher high. But if it doesn't, it will create a demand on its own. Yes, and then we get in at the pullback of the demand on the D1 time frame on the 4 hours. Basically, that should be it for the week. If you're looking at Swiss yen strength, it's not too good, but the Swiss is, to me, stronger than the yen, which we have this structure lower high. This is the low, which went on to broke this structure. It broke the structure, and we're looking at longs, but until it does that, I'm not even bothered. So that's all for the week. That should be all.